So I'm back here with Joe Farrell from Strive for 25, and today we're going to talk about topic two, which I saw him post something very interesting on Instagram. I think I saw it on Facebook, but he was talking about getting, I believe, a 4.875 mortgage rate. And today is July 13th, 2023. So talk about that a little bit more. That's kind of unheard of,
Yeah.
seems like.
Yeah. I mean, I love this conversation for so many reasons. And probably the reasons that people aren't going to be expecting. So one, this specific program is a Missouri program called MHDC. And there's a certain what they call census tract area where they're basically incentivizing more people to go into these certain areas by giving a lower interest rate. So this program has a down payment assistance part of it and a non-down payment assistance part of it. So like if you do the cash assist, the rate's like I think 5.65 or 5.875. I forget what it is. If you do a non-cash assist where you bring your own down payment money in and it's a targeted area, then that rate's at 4.875. If it's out of the target area, the rates are going to be a little bit higher than that. I think like 0.5% higher than that. I'm sorry, probably more than that. I think like the rates are like a full percent higher than that. So in the fives and the sixes. So
Is investors able to take advantage
no.
of this or just okay?
So this is just primary residence, and there's also income limits that you have to fit into. Um, but like that $300,000 price range and below is the most competitive because that's where you're going to have the most people that can probably qualify in that price range. But still, stuff is actually sitting out there longer than it was just a few months ago in terms of inventory. But the reason why I think it's so important to talk about is that like 4.875 versus 6% or 6, because I think I locked one in today at like 6.5, another one at 5.99 with some points. And people keep talking about rates. Well, if rates go down, I'm going to then get back on the search and go find a property. Well, that's what everybody else is thinking about. So you're going to be part of the herd, jumping back in 6 months or a year whenever rates go down. And then we're going to be going back to where things were in 21 and 2021, where it was so competitive. People putting offers well over listing price, and prices are going to continue to go up. Right now, prices have stabilized. They're still
What
going up.
what is the median single family home price in your market?
Ooh, you know what? I should know that. But median probably in the 250 range, 300,000. I don't know. It's very, very average. Whatever that number is, it's very much in the middle of the road compared to all 50 states.
And I feel like everything below the median is still very competitive. Like especially like I invest in Pittsburgh, and yeah, things below the median is still not staying on the market very long.
Yeah. When you say median in that area, what number are you thinking about? Below what?
So same thing, like Pittsburgh is you're probably looking at the 250,000 price range.
Okay.
And yeah, things below that are still just, they're not, like you say, multiple offers, not staying on the market very long. Same thing. There's a lack of inventory in that price point. So it's still very competitive.
When the houses that you bought, like the very first couple of houses you bought in Pittsburgh, was it 2021, maybe?
20, yeah.
That same house today, what will those go for?
Well, you can't trust Zillow estimates too much. But if I go just based off of that and Redfin, I mean, yeah, you're looking at a 20 to 30% increase in the sales price. So to be more conservative, I'd probably say like, maybe 10 to 15 percent increase. But yeah, like you're saying, there's just a lack of inventory out there. And people that are waiting on the sidelines for rates to go down, I mean, they don't, that's like you said, that's what everybody's waiting for. And the market is just going to get even more competitive with no inventory.
Yeah, I mean, one of the things that I'm seeing a lot of is, the seller side, like you said, the lack of inventory. And what's so unique, you've got institutional investors that in the last couple of years have gobbled up hundreds and even thousands of single family houses in bunches to be able to then just turn them into rentals as part of their way to be able to generate return for their investors. So that's had a strain on inventory. And then now, like coming out of 2021, where rates were the twos and threes, like, okay, I have a 3% rate on a house. I've got a 3-bed, 2-bath. I need more space. I want to buy the next house. My price is gonna, that house that I want to buy is probably 50% higher in price. The rates are double. So my payment's probably going to go up triple from what I've got. And so that buyer is not moving. So if rates do go down, you probably hopefully see more sellers be okay with departing with their 3% rate, maybe. But on the flip side of that, it's like there's so much more data and information about investing in general in real estate that if somebody does move up into a higher priced property, I mean, you're going to have a lot more people today that are going to rent that house out versus sell it, because there's other ways you can tap into the equity and use a HELOC or other ways to be able to get your down payment money. And so I don't know if rates go down, maybe inventory doesn't really, lighten up. Maybe it stays tight. I don't know. And construction wise, like, from a multifamily standpoint, they're at high clips of construction from multifamily and apartments, but still on the residential side, production hasn't caught up and it won't catch up for 3 or 4 years. And has to do with labor and materials and uncertainty. Builders don't want to put their neck on the ground to take a risk because there's a lot of uncertainty what's going to happen in the market. So I don't know. I don't see prices going down other than some type of meltdown financially, economically, a banking crisis that who knows what happens. But that's why I say it's such an exciting time right now, because people are on the sidelines. If you can find a deal right now, and you want to get in the game, like getting in the game, if you're doing own real estate at all, getting in the game is so important, because guess what? Once you're in the game, the way that you look at everything in life changes. You have to pay a mortgage. You have to pay your utilities. Like whether you spend money on certain things, disposable income, going out to eat, going out and have fun. Now you've got responsibilities that now need to be addressed and looked at differently. And so once you're in the game, and if you want more of it, that's the stuff that gets me excited. If you want more of it, and you want to start talking about ways to be able to increase income and save money and get into the game more, that's what the whole platform is, Strive 25 is for. Is okay, real estate's a tool, build wealth, maybe not have to need your job, at some point down the road to be able to sustain your life, which is one of the things I talk about. I just talked about this today, was your journey. You said on air that my job, my pension, sticking with that alone is risky. And that blew me away, because most people don't look at that as being risky. Having a pension is a blessing. Right?
I never did. I mean, I for 15 years, I thought it was just I have this pension waiting for me. I'm going to do 25, 30 years and I'll be set. And then I was just like, whoa, my mind was blown. And, it's crazy.
Yeah. It's such a powerful conversation, because, we're in a similar age range. I'm 40, just turned 40.
Oh, thanks, man. I'm 47. Wait,
47. Okay.
I just turned, I don't keep track anymore.
Yeah. But like people that I talk to, on kind of my day job mortgage side of things, there's more and more people that are talking about, hey, I don't love my job. I do it because I have to, but I'm tired of building someone else's dream. I want to build my own dream. That kind of conversation is happening more and more often than I've ever even seen before. And maybe I'm more aware of it now. I don't know, but like that's that Gen Z, Gen Y generation is thinking like that. And the apathy that you hear a lot of, that you see, I don't know if I've heard anybody talk about this. But I'm going to say it out loud. I wish I haven't really said out loud. But people like our age or maybe higher or lower talk about, it's tough to really manage employees. It's tough to get people that are in that Gen Y, Gen Z demographic motivated to want to work hard and do well and blah, blah, blah. Like, I feel like part of it is they don't know what they want. They don't know what inspires them. They don't know what makes them happy or gets them motivated, or what their why, their purpose. Like, I think that's part of what I see is the lack of apathy coming from, like, they just don't know. They don't know what gets them excited. And so I came across my own struggles and failures, and then like, oh shit, something just clicked in my brain of where I wanted to go with what I'm doing. But everybody's journey is different.
Yeah, we kind of veered off topic a lot here, but we can go back to that mortgage. No, but I was going to say, I think that was kind of in reference to that Dana White reel you posted or on Instagram, talking about, like, if you work hard and you're focused in today's world, like, you're just going to destroy
Oh yeah.
everyone else, right? Like he was just like, this generation, like if you're focused and you work hard and you're disciplined, like you are just gonna destroy everybody else in this, today. And I think that's kind of what you're referring to. But yeah, I totally agree. I mean, I think, that's the hardest part is just, staying focused and staying, disciplined and staying consistent with everything. And like you're saying, it's not easy, definitely, both of us are trying to do something, and it's hard, when you wake up every day and you're like, I should post something or do something, but it's fun. And I'm glad I see you every time. So it's like, okay, I got to do something now. But, like I said, we kind of veered off topic, but I kind of want to go back a little bit to that program you were talking about, but
Yeah.
more so in the fact that, are there a lot of programs out there like this, like people, maybe living in, Florida or another market? Should they be reaching out to, brokers to find out what other type of products are out there for them?
100%. And every state's going to have their own programs. And I'll give you kind of a couple examples of some interesting things to be aware of. Like MHDC, for example, has set interest rates with the program. MMP, Maryland Mortgage Program, also has set interest rates. And that program typically has rates higher than the market. And so that's one of the downfalls of some of the programs too, is that like, okay, I'm going to get money, 5%, help with closing costs, but my payment's going to be a lot higher because I have a higher rate. There's another program called HPAP, which is in DC. And I'll save everybody a million minutes of analysis on this one. A lot of red tape, a lot of, process to get into the program. But we have a client that closed, I think in May, that $140,000 of assistance. $140,000 of assistance. Now, it was a multiple year journey to get there. But the cool thing about that program is that it allows the lender to use market rates. So that's cool. So does the program have set interest rates? Are they higher or lower than the market? Income limits you have to fit into. Debt to income ratios are tighter than normal. Every state's going to be different. So absolutely, you can be talking to, your lenders. And not every lender is the same. Like if you go to Zillow and you type in a lender's name, or go to Google, name, lender, Zillow, their Zillow platform will pop up. And this is not the end all be all, but you can tell, does somebody have a lot of reviews or not a lot of reviews? And probably will tell you how much business they have and are they experiencing that? Because there's a lot of people out there that they might not be that very much experienced. And that's going to be kind of a hindrance of really kind of exploring all the options that may be available.
Yeah, that's the, like I think I talked about on your channel when I was a guest on your channel. But yeah, I didn't realize what a broker really meant. Like I just, like I said, I just walked to the neighborhood bank and I just thought you go to the bank and turn in your papers and you try to get a loan or mortgage. But like going to brokers like yourself, there's so much different products that are out there for people looking to purchase a home. So yeah, that opened my eyes. Like,
yeah, I mean, like one more thing to add on to that, because having conversations with multiple lenders is so important, because I may talk about something in a certain way and somebody else might talk about the same thing in a different way. And the third person may do something completely different, and just being able to kind of get an idea of how people are doing things, what they're saying, what they're not saying, and then having some options. It's so important to be able to really have options to compare, in my opinion.
so in your opinion, do you think it's best for people to kind of work with a one lender? Like, let's say maybe their family members looking to buy something. Should they kind of just stick with one lender, or is it good, like you say, is it good to shop around? Or
That's such an important question, because one of the biggest things is credit score, right? You have all these free platforms like a Credit Karma or Credit Sesame or MyFICO, all these different things that are out there. Your credit cards are giving you credit scores. And, that's where people typically start with their own planning. And those scores are going to be different than what a lender pulls from a mortgage. There's just different algorithms. And so, Credit Karma may be showing you at 660 or 640. And then when a lender pulls it, maybe it's at 580, or it could be higher. It's just a kind of a crapshoot. So you don't want to have a lot of people pull your credit scores, but if you've got, say, your go-to and you talk to them and then you have somebody pull your scores, you get a pre-approval, having a couple more conversations and saying, hey, you know what, Mr. or Mrs. Lender, I already have my credit pulled. My score is 660. I'm going to do FHA, blah, 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 blah. And just kind of go through the process and just giving them the basic data that you already know you have. And then you can have a conversation. Like today, I had a conversation with somebody like, I don't want to pull my credit. Okay, no big deal. You're 6 months to a year out on your planning. This is what we can do. We have two options. I can do a soft pull, which is not going to have any impact of an inquiry. And then through that, we can pull everything in and actually give you kind of a roadmap. If you don't want to do that, cool, no problem. We could take a manual inventory of, okay, your income is this. These are the payments you have on your credit report. Cool. We'll do the math, figure out what your debt to income ratio is, and then project out a payment that you can qualify for, and then back into a price point. That right there is the most, if somebody wants to be able to start planning for owning real estate, that is the most important thing you can do. If you don't want to have somebody pull your scores, having a conversation and just going through the data. And if a lender won't do that, then talk to the next one. Maybe they won't, maybe they're too busy. Maybe they don't know how, I don't know. But that's the magic right there, is getting an idea where you want to qualify for, having a manual inventory and just kind of backing in. That's the place to start.
So do you deal strictly with owner occupant loans, or do you also deal with investors? And what states, are you?
So there's kind of two lanes on that, and actually three lanes. So I work for Fairway Mortgage, been doing this since 2006. Fairway is a big company. There's branches everywhere. The way mortgage business is typically done, not including a call center, because call centers are just, big places they do business everywhere, like with the bank. So most companies will do things locally, right? And they may be licensed in a couple of states. So my background is unique, and I won't bore with the story, but I'm licensed in, I think, 23 states, 22 states, which is not the norm in our industry. So I'm licensed from Maryland, Virginia, DC, to Florida, the Carolinas, Texas, California, Midwest, Missouri, Illinois, Indiana, et cetera. So investors, a ton of investors, a lot of short-term rentals. I'm a subscriber to AirDNA. So, we have a lot of people looking at short-term rentals and trying to figure out what's the right fit. So we dig into that. And then a separate lane from that is more of like your more sophisticated investor, fix and flip, apartment complexes. And then we have a private money lane that's tied for that as well, which is separate from Fairway. So me being an investor and kind of going through my own journey, that kind of drove me to go kind of have a separate lane to be able to have more to be able to offer. And that's nationwide.
All right. So yeah, I mean, hopefully, my guests will reach out to you, if they want me to pick your brain, talk to you about lending. But just a quick, do you have a prediction, or where do you see rates heading? What do you think it's going to be, let's say, end of 2023? What do you think it's going to be at?
So, okay. July, I don't know the date, but June's CPI data is going to be coming out soon, later this month. I don't know what day. I should know what day, but I forget. That data is going to be some of the most important data that will have come out in the last 15 months in terms of inflation. And I've been saying this since January. I predict this since January. Inflation will be at 2.9. CPI full number will be at 2.9. So then what does that mean? And why does it matter? And how did I get there? I'll make this very short. Mortgage rates track the direction of inflation. If inflation is going up, then rates are going to be going up. That's your just basic blueprint. So inflation went up, mortgage rates went up very, very high. And then at this point, inflation from last month, the core index just the full number was at 4%. And last July with June 22's data was at 9.3%. So from 9.3 last June, which was released in July, that was the peak. And that June of 2022 data, that individual month of the June was at 1.2 by itself. So 1.2 in June of 22. May was 1.1. Those two numbers are basically falling off. So last month was 4. The previous month was 5. So when June's data was released for May, CPI went from 5% to 4%, which is a massive reduction. And then that's because May of last year fell off the 12-month average. So the 1.1 number fell off. So that's why you saw this 1% reduction. And then 1.2 of last year is going to also fall off and be replaced by a much lower number. And I think last month, the monthly number was like 0.1 or 0.2. I forget the exact number for May. So that's why I'm saying 4, possibly down to 2.9 or 3, because that 1.2 number is going to fall off that rolling average. And then if it gets into 2.9, 3 range, the Fed's going to have some very, very, very tough decisions coming very soon, because the Fed's target is 2%. And what do they do from there? What does CPI do from there as we kind of round out the rest of the year? I don't know. Because going from 2.9 or 3% down to 2, that may never, ever happen. Who knows? Or maybe it takes 5 years to go that extra 1% down. So does the Fed maybe adjust their target from, hey, 2% inflation target to 2 to 3, or maybe they don't much. I don't know. But this few weeks from now, if you see a 2.9% CPI rating, you're going to see a lot of craziness happening in a frenzy of people getting back in the game. Rates maybe even in the last 2 days, the 10-year Treasury was at, now I'm blanking, 4.3, and now it's at 3.8. So it's come down massively in just a couple of days, and rates have come down with that. So, I don't know. So prediction by the end of the year, I wouldn't be surprised if we see rates in the mid 5s.
Wow.
By the end of the year.
So
maybe a 0.5%, maybe a full percent lower than where they are. I don't know.
Man, and with the inventory level that it's at, and I think if we get into the mid 5s, we'll be back to 2021 off to the races kind of thing. I mean, it might not be good for the market as far as just lack of inventory, and demand, I think, is going to spike. So it'll be interesting. I mean, mid 5s it's a long ways away, but I mean, like I said, it could be possible. Like you're saying, the big drop in the recent rates, the CPI data, and I mean, definitely a possibility. I think I would say, don't hold me to it, but I think low 6s is where we'll be at.
That would be healthy.
Yeah,
that would be healthy,
I think. But we'll see. I mean, it's like I said, there could be so much things in the economy that happens from now to then that could change course. But just looking at it right now, I think low 6s. But it's been great. I hope we can do this kind of on a weekly basis, just talk about what's going on, and it's been fun. And before we go, I kind of want to also remind you that the Warriors didn't make it to the finals. And, we kind of, I don't think I officially accepted your bet, but.
You did not accept my bet. Thank goodness. Thank goodness.
Yeah. I mean,
you would have won the bet. You would have won.
I would have. And you would have wrote off your trip to Hawaii saying it was some sort of social media event or something to do with your podcast, or maybe book promotion. Could have been for like your book tour. But yeah, it was a good finals though. I enjoyed it.
I mean, if 1 million people buy my book from now until like November, maybe I can book a trip in December and visit you for like, New Year's Eve, post New Year's Eve day or something like that. Yeah. So if 1 million people buy the book for $3, I mean, maybe I can do that. I'll then visit you.
Yeah. Got some short-term rentals you can stay at too now.
Nice.
As long as you can follow instructions. That's my one, man. Like I told you before this, it's driving me nuts already.
You're going to tell me follow the instructions, and then I'm going to get back to St. Louis on my flight. Like, oh shoot, I got these keys in my bag. Damn.
There's a $200 fee for any lost keys and a bad review on your Airbnb review I'm going to have to give you. But yeah, it's amazing me that, I don't know, every day I'm blown away by, we have to write something new in our description. It's like, it's unbelievable. From every day, after every guest, there's something else we have to add to our instructions. It just blows us away.
Right. And the longer the list is, the less chances people are going to read them all. Damn. I don't know. That sucks. It's a catch-22.
It is. At first, I was like, yeah, let's try to just keep it simple, keep it, but now it's like this is the lobby door that you walk into. Take a right over here. Look for this lockbox. It's like detailed now. It's like, but yeah, it's interesting.
Okay. I'm the one who brought the bet up to you, and you didn't accept it.
I did, didn't I?
You never accepted it. You just said you laughed at me and you said it's a good idea, but you never said bets on. But
Oh,
I
well.
don't stop. I don't stop. I don't have a bet today, but I'm gonna put something else out there. So I could talk NBA all day. But the Warriors and then contracts. How cool would it be to be able to get like a sports agent that knows contracts and like salary cap stuff on talking about NBA or whatever sport it is, talking about like the economics of how teams make their decisions, because that is a pure salary cap move, et cetera, et cetera. And then like on top of that, my vision, like at some point in my life, I would love to be able to interview Steph Curry. I mean, the chances of it happening are very, very slim. The reason why I bring it up on your show, because you gave me shit about being a Warriors fan, even though they were the defending champions at that point in time. But like,
Hey, wait. You got to tell people where you live, though.
oh yeah, I live in St. Louis, Missouri, so like I'm the biggest Warriors fan east of Tahoe. It's a fact. Like there's no denying that. But Steph Curry, the principles that I talk about in the book, and tapping into the power of the subconscious to help you reach your goals, increase the odds of reaching your goals. People like him, Jordan, Serena, Tom Brady, these are the things that whether they know that they're doing this specifically or not, doesn't really matter, but they're doing it. And you start to believe in something that's outside of your realm, and you have a certain process and you start doing things in a certain way. Literally anything's possible. And these are the principles that I've had to do to be able to get to where I'm at. And so like, that's why I say, if you believe and you've got a process, anything's possible.
Well, not too much people follow my channel, so you don't have to worry about anything. But so, are you glad Jordan Poole is gone?
I'm I see both sides of it, and I'm not glad, not mad.
Oh,
I see both sides of it, and I like Jordan Poole a lot. I like him a lot, and his ascension and the work that he put in going into last year when he did so well, like he was just killing it. He regressed a little bit. I think part of it had to do with his preparation and attention to detail. So I think he's had a lot of promise for his career, and I think being around Steph and Clay, helped that a lot in terms of how they prepare and the work that they put in every single day. And it's not about like the shooting drills, and how a lot of it's mental stuff that they do as well. Being around them, I think, was super important. But I think his career is going to take off at some point and go in a good direction. But like at the end of the day, that team is on a win today, win tomorrow mindset. And like having a stabilizing person like Chris Paul on the team, I think he's 39. Like that's like 50 in like real world terms in terms of like how basketball age goes. Like when you hit 35, like you're pretty much done in terms of being, elite. Now LeBron is the exception to that story. So Chris Paul at 20 minutes a game, I think becomes a stabilizing factor. And they were like third in the league in turnovers, which is terrible. That's what ruined them. So swap out Poole and Chris Paul. I mean, I think if he stays healthy, I think it could be a positive. Don't get me going. Don't get me going here. I could go on.
No, I mean, I love Chris Paul. The issue now is that he has a hard time playing in the playoffs when you have like back-to-back games. Like if you just had one game, he is. I mean, he can still, go out there and ball. But the fact that in the playoffs, the games are kind of the schedule the way it is, and like you're saying, at his age, it's just harder to for anyone to perform. But with his injury history and everything too, I mean, it probably makes it a lot harder for him. But yeah, I mean, if they can somehow figure out how to just monitor his minutes and keep him healthy enough to where, I'm still not going to take your bet on it if they make it to the finals, but but yeah, and what? So we'll talk next week, and then maybe we can talk about Shohei Ohtani going to the Cardinals. I keep hearing that rumor.
Oh shit! Okay, yeah. I need to look this up. I did not know. Okay, I'm in to talk about it. I'm in to talk about it for sure. Let's do it.
I don't know how serious it is, but there's a rumor that that's one of the landing spots for him. He's
a free agent, right?
Yeah. So there's well, I don't know exactly, like you're saying, I don't know the exact contract terms, but there's rumors that he could be traded or picked up. But yeah.
So okay, Scott Boras will never hear this. He will never hear this. But I hate that guy. I don't like that guy. He's setting the bar for contract, which is good for players for the long term. when I say that, I say that out of just half joking, but like Albert Pujols had the most amazing last season ever in the Cardinals. And, 10 okay years with the Angels. And most Cardinals fans would say, hey, I'm thankful that he's signed elsewhere. And I don't even know if Boris is Pujols' man.
Well, you
agent.
just,
I don't even know.
I can cross him off coming on my channel now for what you said, but.
Right. But like, I'm a big believer, like, let's just make this an open market. Like, okay, I know that Shohei Ohtani is going to be like the best player for 5 more years. Like, I'm going to pay you $80 million for 5 years. And then I'm going to pay you $30 million for your last 5 years. I give you a 10-year deal, but you're going to get $80 million when you're valuable. And then like, okay, you're not going to be as valuable later. And we'll pay you. I would love to see that. It's never going to happen. But like, if Pujols would have signed a 7-year deal and when he was 32 or 31 at the time, and you paid him $40 million, like, I would have done that in a heartbeat. And then just make it a shorter contract and pay him more. Like, these 15-year contracts that are being paid out, I think it's just so stupid. Because at 42 or 39, like, do you really want that pressure to be living up to a massive contract? Anyway.
Yeah. Well, no, and like I think baseball, right? It's all guaranteed contracts.
Yeah.
So that's why, like, even like NFL and stuff like that, it's like, these guys are playing, but it's like you get hurt or whatever, and you get cut. I mean, your signing bonus is guaranteed, but your contract isn't. So I think that's what the big difference is. Like you say, they could have a 15-year contract and like the last 10 years be a bench player and still making whatever $20 million a year or something.
Yeah.
But yeah, we can.
Above my pay grade.
Oh yeah. Do this again. Hopefully you'll be on time this time, and not for just because you have a book now, you forget about us other podcast channel or YouTube channels, and
you're really gonna rub this one in. I'm 34 times sorry. 34 times.
No, man, I'm just playing.
Maybe 50.
I was just sitting
50.
here waiting for you, and I was like, oh man, did he like forget about me already? He has a book, best-selling Amazon book.
That's generated zero revenue to this.
Well, we'll you know what? Next week, hopefully, we'll check it out and we'll see how many were sold. So everyone out there, go check out his book.
Yeah,
it's $3. It's probably shipping might be more than that, but just go check it out and help my man Joe out, and he'll be back and help him pay for his next trip out to Hawaii after the Warriors don't make it to the finals next year.
Okay.
But awesome. Thanks. Yeah.
Thanks, Mark.
Talk again, man.
All right. Bye.